everybody.
Hello, hello, hello.
Hello,
hey,
hello.
everyone.
What a dense room. This is unbelievable.
Great.
I've got to say, when we made the first data investments earlier this year, I did not expect there to be multiple DAT panels and tens of billions of dollars raised for this. So this is very, very exciting. I'm so excited to be sitting with all three of these gentlemen here. We at Pantera, we've been investing in DAT since day one, and we're actually investors in all three of these. Have seen all three of these really come to life, and all three get people that I really respect. Maybe just to start off the conversation, like very clearly, I'd say the price action on ETH this year has been driven by all the excitement and the inflows that have been driven by the DATs. To you guys, why do you guys think now is the time for Ethereum to shine?
So let me start, I guess. So we've been building for about 10 years. So we've been building layer after layer of enabling infrastructure. And more recently, we've achieved scalability, horizontal and vertical scalability. We've achieved affordability in terms of cheap block space, cheap transactions. Usability has gotten good. It's going to get great as we bring more AI into the user interfaces. And it's become legal, more legal in many parts of the world, including the United States, to build in the ecosystem, to use tokens, to issue tokens, to use DeFi. That's going to come very strongly soon. And in building scalability into the Ethereum ecosystem, the path that we chose was to seed pricing power from layer 1 and enable all these layer 2 networks to provide computation and just enable eventually millions of transactions per second, potentially. There's a shot that we'll get that big to reduce latency. And the result of that was that we've had a glut of block space and not enough applications. So making it legal to build applications is going to bring the applications and build the users. In the meantime, we had a bit too much Ether out there for all this cheap block space. So a while ago, we at ConsenSys decided, hey, Michael Saylor's doing some profound things with his DAT, but we can do it better because Ethereum's a productive asset. You can get significant yield, staking and doing other things with your Ether. So this is a natural. And oh, by the way, we think we can light a fire under the Ethereum ecosystem. So we did our research, we raced to market, and so far it's worked out pretty well. And we were hoping that that we would inspire other projects to do the same thing.
Tom, you're wearing a Tamagotchi. This gives me some horror flashbacks of my Tamagotchi dying as a child, but also pangs of nostalgia. What is going on there, and what's that have to do with ETH?
Well, this is an Ethereum project, Critters, and you can follow it on Twitter at ucritters. But it is an air quality measurement device because the Tamagotchi needs clean air. The number you want is 420, and it's currently 1433. So there's a lot of CO2 in this room, not surprisingly, because we're rebreathing air. And I think the level that affects your judgment ability is 600. So we're past it. We have impaired decision making here. So we might be making outlandish statements.
So we're
Did you say that the number that you want is 420? That's interesting.
Well, yeah, I don't know if it's rounded down to 420. Yeah.
Maybe to double click on something that Joe, you said, maybe throwing it to Sam. What do you think makes ETH more compelling as a DAT than something like Bitcoin, which started it?
Yeah, well, look, listen, we're now, there was a time when we all lived through the era of Gary Gensler, and that chairman couldn't decide whether Ethereum was a commodity or a security. So because of that legal chaos around Ethereum, Bitcoin had a bit of a head start, and you had folks like Michael Saylor going around championing what was a commodity, which is Bitcoin. But Tom, Joe, and I were not able to really champion Ethereum because there were some questions about whether it's a security or a commodity. You can't really champion a security unless you want to go to jail. So we couldn't really go out there. Now There's a lot of regulatory clarity around Ethereum. You're seeing a lot of congressional acts being passed through, particularly on stablecoins. And as we know, most stablecoins are built on Ethereum. And so you're seeing a lot of friendly action towards Ethereum. Gary Gensler is now put out to pasture. And that's why you're seeing a lot of great price action on Ethereum. That's why there's been an unleashing of Ethereum. The developers on the Ethereum ecosystem can write code without fearing that they're going to go to jail. So that's a big deal, and that's why you're seeing a lot of price action on Ethereum. That's why you're seeing these treasury trades on Ethereum. We can safely now champion Ethereum the same way that Michael Saylor did with Bitcoin, because Ethereum is now, safe to say, classified as a commodity, just as Bitcoin. But to answer your question, why is it superior? Well, first of all, a few things. I don't know where to start, but Ethereum has, and thank you for this, Joe, smart contract technology, very important. You can disintermediate and rewrite the financial system with smart contracts. It has staking. Again, Bitcoin doesn't have smart contracts. Bitcoin doesn't have staking. It is a superior form of treasury. And again, we were kind of stuck because of Gary Gensler. He's gone, and that's why you're seeing an unleashing of Ethereum. And frankly, if Bitcoin and Ethereum were invented on the same day, you probably would never have heard of Bitcoin at this point. Bitcoin had a head start. I understand that. It was safely classified as a commodity. Ethereum was stuck. Now it's unleashed. So that's why we're all here today on the stage.
Yeah,
I love
so just let me build on that a little bit. For years, we've been sort of baby sibling to Bitcoin. And Bitcoin has been doing well because it has a clear value proposition, and it's building for today, essentially. We've racked our brains for years trying to come up with a pithy, a legible way of sharing the value proposition or the value propositions of Ether and Ethereum. But it's so hard because Ether is such a big ecosystem, and you can kind of do everything in a decentralized way on Ethereum Layer 1 and Ethereum Layer 2s. Along comes Tom Lee, and he nails it. Maybe in his first try, he basically said, Ether's the next Bitcoin. Ethereum's the next Bitcoin. I was like, oh my God, that is brilliant. And he was talking about mind share. What's incredible about Ethereum is that, and the reason that there are 2-3 ETH DAT companies and a major ETH DAT investor on this stage is because we can differentiate ourselves in so many different ways because we have such a giant canvas to paint on.
I love that. Hopefully not too many, or maybe we should hope for some Bitcoin maxis in the crowd. I love that Sam is always getting it a little going. How do you think, one of the things that I like the most about DATs as I've thought about what they really provide is it's almost like a third leg of the stool to there's always a labs, there's a foundation, and now there's a DAT. And I feel like DATs can do something and advocate in a way that others can't, but that's very controversial. How do you guys think DATs will participate in the ecosystem?
So SharpLink and ConsenSys are joined at the hip, and we have a lot of people working together from ConsenSys, seconded into SharpLink, etc. Essentially, we see 3 parallel tracks for us to follow. The first one that we're all doing is raise a ton of capital and convert it to Ether instantly. The second one, do your best job of earning yield, risk-adjusted yield, on your Ether. We think we have some really exciting ways to do that with our Linea Layer 2 technology, and so we think we'll be able to stack ways to earn yield. The third one is essentially the long-term opportunity where Tom's probably going to get to 5% first. It's a bit of a sprint in this early stage, but it's a marathon, really. We're all probably going to get up to significant percents of the monetary base, but we're not going to want to go too far because the community is probably going to start pushing back. And so we move into this phase in which we're building and investing in infrastructure. So we're all going to mass giant piles of high-powered money, Ether. It's high-powered because it's uncensorable, because tyrants in different nation states can't use it to repress their population when the debt's too high. And upon this high-powered money pile, we can do things like Berkshire Hathaway, where we can do civilization building for the increasingly decentralized civilization. We can borrow against it. We can use it to stake in important protocols. We can use it to king make, which may be too centralized a term to use, but to identify the best and brightest young builders, to invest in protocols, and we think we're going to be able to set up a flywheel where we 2x or 50x or 1,000x via investments that we make once we're in ecosystem or civilization building mode.
Yeah, and if I could add, I do think Ethereum is a blockchain where there can be a lot of differentiation with the treasuries. BitMine's view is that Ethereum is starting a super cycle. So we are at the base of a big transformation happening on Wall Street and AI that's moving onto the blockchain. And I spent some time this morning talking about it. And so part one of like an Ethereum treasury is just to acquire Ethereum because it's a vastly undervalued asset. But because there's so much that's taking place, and it's it's Wall Street literally building a financial services system on the blockchain, that's where someone who does accumulate a significant stake in Ethereum can actually play a benevolent role in actually that sort of onboarding process. So I think phase two of BitMine's view is, we want to be not only involved with DeFi and education and really helping communicate the narrative around Ethereum, but it's also building the rails that will make the financial system operate on Ethereum. And of course, it's a huge addressable market. I think it's, over the next 20 years, it's really more than half of all global GDP will end up being taking place on the blockchain, and that's an $80 trillion economy. So that's a huge number. And so I think that third part is bridging financial systems, because I think traditional financial markets, as they're getting tokenized on crypto, it's also making the treasuries kind of sitting at the center of that. And part of it is institutions can't buy ETH directly, and they don't want to buy the Ethereum ETF, which means that these DATs represent pure exposure for the institutional world, and that's a huge number, because I would say, when Bitwise says 5% of BitMine is left to be mined and 95% of institutions don't own Bitcoin, well, Ethereum is having its, let's say 2017 moment, and less than 0.1% of institutions own Ethereum. So there is a massive, massive flood of capital, I think, that's going to go into the ETH treasuries, especially the ones that are differentiated.
I love that everyone shares the same North Star, which is really advocating for Ethereum. When I think about DAT's number one job is to advocate for the underlying token. But when you zoom out, there's obviously has to be differentiation between all three. I'm sure people in the crowd are considering BMNR, SBET, BTBT, what do I do? And as an investor, I'm very happy about that there is this very high level of competition between you three. That's healthy for capitalism, healthy for ETH. How do you guys differentiate yourself? I want to give each of you an opportunity to say why you, what are you doing that's different?
Well, BitDigital is uniquely positioned, and there are a few reasons for that. What are the three sources of capital to buy Ethereum? Either through your business, either through equity financing, either through debt financing. So BitDigital recently IPO'd its AI business just last month. Very successful IPO, and we own 71.5% of that business. It's called White Fiber. Why am I talking about White Fiber? It is a pure play AI infrastructure company. And Tom is right. There are super cycles that are happening right now. Those super cycles are in Ethereum and AI. So the way we positioned ourselves is to stack Ethereum and to have an IPO of an AI infrastructure company, which is White Fiber. So Bit Digital is 2 line items on the balance sheet. It's Ethereum and Wi-Fi, which is the ticker. Great ticker, by the way, I think. So if we are exposed to the 2 greatest story arcs of our time, which is artificial intelligence and Bit Digital, and we're able to use the business, a real business, right, which is AI, that AI business, and we could sell down that position in a measured manner, we could use that as a source of capital that doesn't dilute existing shareholders. Also, there's no reason to sell down that position anytime soon, because as the valuation of White Fiber goes up, that cascades into the valuation of Bit Digital shares. That's called a win-win. The second way to purchase Ethereum, and by the way, there's no other DAT that I know of that has that lever, the first one, through the business. The second one is through equity financing, very simple. Sell equity above MNAV, very simple. Third is through debt financing, which is very interesting. Michael Saylor has showed us the playbook on how to do this business. You have to be very creative on the capital structure in order to run a successful treasury business. So what do you do with that? You could sell your equity, that's fine, but the debt is super interesting. And for some reason, there is no Ethereum treasury company that has a levered play on Ethereum, and we noticed that. So this week, we created a situation with our convert where you sell debt and it's not secured. And that's very important, because there is toxic debt where you secure your debt, and then there's non-secure debt. And that's very important. So we raise capital, non-secure debt, and that's extremely important, because if you have secure debt, listen, we've been through a number of crypto winters, and if you have secure debt, your lenders are going to go after your crypto, take your crypto, and that ETH treasury company is going to go bankrupt. So you have to have unsecured debt, which is what we did with our convert, and we're the first ones to do that as of this week. So those are the 3 routes, and how we differentiate ourselves is to have this levered play with unsecured debt, and to have an additional capital lever with White Fiber, being exposed to the greatest arcs of our time, which is digital assets, particularly Ethereum, and secondly, artificial intelligence.
Cool. Yeah, so I think in terms of near-term activities, the DAT companies are probably going to overlap in their strategies significantly or somewhat, and have different elements of differentiation in how we use our Ether to earn yield. The greatest strength that SharpLink offers, and perhaps its greatest differentiation, is the intimate partnership with ConsenSys. ConsenSys is the broadest and deepest company in the Ethereum space, and therefore the broadest and deepest blockchain company. We're full stack. We have been building out the Ethereum protocol for years. We built Ethereum clients for years. We help run the Ethereum network. We built layer 2 technology that is turning into a leading layer 2 technology, the Linea ZK EVM layer 2. We built MetaMask, the largest non-custodial wallet on the planet. So over 100 million of you, hopefully all of you, use MetaMask annually, and 20 to 30 million on a monthly basis. So we have giant distribution. We're rolling out a rewards program. The rewards program will shower the world with Linea tokens and MetaMask tokens and other tokens over time, and will do things that link activities in the ConsenSys ecosystem, a lot of mutually supportive, positive feedback loops to things that SBET is doing. So a lot of flywheels.
Yeah, and I'd say, BitMine's differentiation, is driven by some of the first principles of the company. The first is it's important to have a pristine balance sheet, basically what we call a fortress balance sheet. And that's why BitMine carries around $600 million, as you've seen our weekly updates, cash, because that gives the company the ability to buy ETH offensively if there's a big decline, because we try to buy ETH very carefully. Or, of course, we can protect shareholders if the stock somehow weakens. And so we have an offensive and defensive reason to carry so much cash. The second has really been a shareholder-focused model. And for shareholders, that means really helping anybody who buys BitMine understand why they're owning the stock. And so we do publish a corporate presentation every month, and we have a chairman's message so that you can clearly follow our strategy. And as you know, the phase 1 of that is to acquire 5% of Ethereum. And then phase 2 and phase 3 are really seeding the ecosystem and then helping build the rails for the rest of Wall Street. And the third is that the company has emphasized the importance of having the stock be highly liquid. And BitMine trades $2.5 billion a day, which makes it the 26th most traded stock in America. And it is also the 518th largest company today in the US stock market. So it's attracted institutional investors because this is a pure play, large cap way for them to get exposure. And we hope to be included in the major indices on the next rebalance, which would be June of next year. And that is really had been a big unlock for MicroStrategy, because they started to get 1,500 large cap institutional funds that would have to now own a Bitcoin entity. And I think that's where, when we begin to stake, and we want to do native staking, the $12 billion of Ethereum held by BitMine, it could generate as much as almost $400 million of pre-tax income. And that would actually make BitMine almost the 800th most profitable company in America as well. So I think that we're trying to differentiate ourselves by keeping the story super clean and super simple, and communicate that to shareholders.
Let me reflect back a little bit of what I observe and what makes you guys differentiate, and maybe ask a specific question. Tom, for you, I feel, my observation as an investor is I get the opportunity to see what's worked, what hasn't, how people evolve. And it does seem like for DATs, the key thing is attracting Main Street retail, right? And Main Street and financial media, and less so, as much as I love everyone in this crowd, less so the crypto natives. Who do you think is the new buyer base that you are attracting, and how are you reaching them?
Is the question for
Yeah, for you, Tom.
It's broad-based because if you look at the traditional equity market, the retail, and there's really four cohorts. Like, these are the dependable buyers of stocks. We know it's institutional, and that's 30% of the market. Then there's United States retail, which is both Robinhood, but also high net worth. So it's two cohorts within retail. The third is institutional family office pension. So that's different than a mutual fund or a hedge fund. And the fourth is international. At BitMine, we've studied this. We have a very large institutional and growing presence. We are, Kathy Wood, I think, a top 10 holding for the ARK funds. And she is our largest shareholder. We are really proud about that because she, of course, is an exponential thinker and originally a Bitcoin primary person, but now she realizes Ethereum and Bitcoin are friends, which I acknowledge. But we have a lot of retail investors, over 330,000 holders, and we are starting to see a lot of family office interest. Because again, this is a direct play in a levered way to get exposure to Ethereum. And then we have a large international base. I know, for instance, in some countries, we're the third most traded stock in that country after NVIDIA and Palantir. So I think we are finding that we're tapping into all four universe of investors.
That's very exciting. And then Joe, when I look at SharpLink, one of the things that I thought was most exciting was, and really a marker of where the maturity of DATS has gone, was the hiring of Joe Shalom. and bringing in a heavy hitter from BlackRock. How do you think about building management teams and what it was like to recruit talent for a DAT?
Yeah. So Joseph came from BlackRock. He built the Aladdin platform. He is rigorous about not wasting money, keeping expenses tight. We are very focused in the near term and medium term on protecting the shareholder and providing value to the shareholder. So that's about potentially, it's about growing the concentration of Ether per fully diluted share, but it's also about paying attention to the price of the stock. So if we need to buy shares, we will do that. We can do that without selling any Ether. And so that's bringing that sort of rigor from an organization like BlackRock is helping us. We are building out our infrastructure so that we can do everything we need to do cost effectively in-house. And long-term, we're going to be taking care of our retail investors, going to institutional and family offices, and sovereign wealth funds, because our long-term focus is growing outsized wealth for our shareholders by building infrastructure that is highly aligned with the Ethereum technology and the Ethereum ecosystem, and we think that's going to be the most effective growth strategy.
Yeah. And Sam, whenever I evaluate public companies, I always think about the experience of the team. And when I look at a lot of these DATs that are formed, it's not public company people. So when I look at Bit Digital, you've been a CEO of a public company for quite some time. What do you think is the skill set needed to be a proper public company CEO, and what maybe other DATs might be missing?
It's not just one person. It's not just me. I'm surrounded by co-founders who bring a superheroic skill set to the table. One's an originator. One creates an institutional process. The other one is dealing with the risk management, and I'm dealing with the marketing. So it's just really about surrounding yourself with a team of Avengers, and the synergy of that is I'm super blessed to be surrounded by these gentlemen.
Awesome. And when I think about what DATs really are at the end of the day, one of the core drivers is using cap stack management and financial engineering to get what you need. What types of corporate actions are you guys most excited about? Do you guys want to pursue M&A? Do you guys want to issue debt? I'd love to hear how each of you think about managing your cap stack.
Well, I have a very strong view about that.
Yeah.
We have to be, as I mentioned earlier, but it's worth mentioning, we have to be as creative as possible on our cap stack. Diluting existing shareholders is just one lever. So the convertible that we did this week, I'm surprised we're the first ETH Treasury public company to do that. I would imagine that you guys will probably be looking into that too. Michael Saylor truly did an incredible job being a wizard on the cap stack, and we just have to be very creative on leveraging that capital structure, particularly with respect to converts. That is an extraordinary financial engineering tool. And I just think that's what we need to do, because if you're just selling equity above MNAV, that's great. You got to do it above MNAV, but it's just one lever. And so we have to be really creative on that. And I honestly think that the long tail of these treasury companies are not going to exist if they're not being creative on the capital structure.
Yeah. So we are looking at preferreds and converts, and you need the volume, which we have. You need the options. You need the volatility. So maybe there will be an announcement at some point in the future.
We're the first.
You also need long-term committed capital, and so that's when you go to the family offices and the institutions and the sovereign wealth funds and again, civilization building technology.
Yeah. I think that one of the things the team at BitMine did was study MicroStrategy's playbook really carefully because they executed 21 different financing transactions, including some things that were novel because they've essentially financialized the balance sheet of a company, and they've done step function transactions, which raise the Bitcoin held per share. BitMine's view is that there's several unique characteristics about Ethereum and BitMine that are helpful in raising money. And BitMine's goal is, of course, to grow your Ethereum held per share. It was originally about $4 per share on July 8th when the first transaction closed. That was the pipe. And as of August 27th, which was the last time we reported Ethereum held per share, it was almost $40. So we are growing your Ethereum holdings per share. And the way we've done it primarily is to take advantage of the liquidity of the stock. And again, it's the 26th most traded stock today, $2.6 billion of trading. And so institutions are really eager to get exposure to a BitMine. But there are, of course, other virtues. One is the high volatility of Ethereum. Ethereum is 50% more volatile than Bitcoin. But there's also the high implied volatility of BitMine stock, which has an implied vol of 120. So the reason we've been sticking with straight and simple transactions is we don't, number one, introduce capital onto the capital structure, things that compete with our equity holders. We want to deliver foremost superior returns to our common shareholders, anyone who buys BMNR. But we also want to make sure that we can monetize that implied volatility correctly. The highest vol that Michael Saylor achieved on a convertible bond was 60 vol, and BitMine's implied vol is 120. So we'd either have to create a new kind of market for people to properly price that vol, or we have to wait. And then, of course, there is an inherent yield in holding Ethereum, at 3%. So it does make sense. Like Sam can service his convertible instruments with the staking yield. So I don't think there's a problem with pursuing that structure. But I think for now, BitMine is going to tap into the liquidity side, not the vol side, for financing. And as long as the market's supportive of that, that's what we're going to pursue.
That's all helpful. As someone who's invested in a lot of these and in many ways helped form a lot of the beginnings of this industry, I bear the burden of responsibility sometimes of many people yelling at me about all the risks and problems that there are with DATs. And so I have my responses to them, but I'd love to learn from the masters, maybe going through one risk each at a time, starting with you, Joe. The most common question is, why do I own this versus spot? As someone who clearly owns a lot of ETH spot, how did you think about that?
So it's likely to be a better investment if you put your capital into an Ether DAT for a decent amount of time. It's as simple as that for a retail investor.
Yeah.
More Ether per dollar if you're in it for enough time.
Right. And then another common pushback is, wow, there are so many DATs. Like, how do I think about differentiation? Why should there be so many DATs? Sam, how do you think about how this all plays out? There are many more.
There shouldn't be so many DATs.
Yeah.
There shouldn't, and they will not do well. That will end in tears. You have to differentiate, and we've done our very best and our darndest to differentiate.
I have a different view on that, and I'm not discounting what you're saying. I know what you're saying, and I agree with it. I think there will be different classes of DATs in the Ethereum space or the broader space. Some will pursue yield in more immediate terms. Some will be long-term ecosystem builders. Some will have adjacent activities that grow value alongside Ethereum. There will be DATs that are multi-token, and I agree that there will be some top-tier DATs, a very small number of those in the Ethereum ecosystem, but there will also be some regional DATs that are important for sourcing the capital of the local audience. And there's also a kind of DAT that is going to be ubiquitous. In the internet era, there are these companies, these interactive companies, or these web studio companies, and they formed when the web started to get traction. They formed to build websites for companies. They formed to build e-commerce sites for companies, and eventually mobile, etc. Initially, they were called internet companies, and then everybody was an internet company. So I think we're going to move into a phase where virtually every company recognizes that they have to do something on Ethereum Layer 1 or Ethereum Layer 2. In order to do that, you need to own tokens, because the way to participate often involves just the ownership of a token and the use in a protocol. So they're going to need to take care of their token treasuries. ConsenSys, almost nobody's thinking about this. ConsenSys is thinking about this because we're building MetaMask, decentralizing MetaMask infrastructure so that everybody can build on the technology. We're building MetaMask Consumer, we're building MetaMask Bank, we're building MetaMask Enterprise. And so all of these DAT companies, all the companies in the world, are going to call themselves DAT companies for a little while, then they'll just be called companies in the Web3 space.
Yeah. And then the third risk that I hear the most people talk about or push back is all these DATs, they'll trade at like 1 times NAV or below NAV over time. Tom, I love the framework that you've put together. Like, what is the fundamental case for why these can or should trade at a premium?
Yes, I think ETH DATs should trade at a premium. One, they should trade at 1 times their ETH holdings. There may be temporary disruptions. Additionally, because of the staking yield of 3%, if you apply just a S&P market multiple, let's say 20 times, that's a 0.6 on top of the DAT. Now, if I look at Michael Saylor, they don't have a yield, but he trades at 1.6. I think a lot of that 0.6 is the fact that he's in the Russell 1000 index. So I think that's passive institutional flow. So an Ethereum DAT, when it is included into a major index, like the Russell 1000, it probably should trade well over 2 times. I think there's many actions an ETH DAT can take if it trades below NAV, and I don't know if that's one of your questions, but I have some views, but I'm sure these guys have views.
I want to hear them.
Huh?
I want to hear them.
Yeah.
We can talk backstage.
Yeah, but I think there's many things I would prescribe, and it'd be a checklist of actions. And I think that, to me, it's not necessary to have mergers happen. I think ETH DATs can internally solve their own problems.
And mergers may not be most effective for the space because all of us are going to get to a giant pile of ether. So it may be better that we all stay separate and collaborate where it makes sense.
Well, as the guy who lives in the capital markets, I like consolidation. It generally is good for returns on capital, but I get the hardest part is finding a willing seller.
Yeah.
Maybe just as we close out here, one final question for you guys. Going back to what DATs are as advocating for the underlying token, if I were to ask you guys for your one-liner on why ETH, what is it? Starting with Tom and going down.
One-liner?
The one-liner or a soundbite
Is
for
it
ETH.
like a 20-foot long
I will leave it up to you how long you want the ticker tape to be.
Yeah. I think ETH is in a super cycle because Wall Street and AI are building on a neutral public blockchain, which will end up being Ethereum.
So the global economy is progressively decentralizing, and the Ethereum technology will be the foundational trust layer of the Web3, the next generation economy. You missed the biggest risk of all, which is if you're running a company, if you're a builder, the biggest risk would be not participating in the Ethereum economy.
I think not participating in the 2 greatest things of our time, which is Ethereum, which will rewrite the financial system, and artificial intelligence that will rewrite society. It's already happening. So positioning to be exposed to those 2 story arcs is, for us, the most important thing at Bit Digital.
Well, you guys heard it here. ETH is an incredible asset for all these reasons, and DATs could be an interesting way to express that. Thank you guys for pioneering this.
Thank you.